Good afternoon, everybody. Thank you so much for being here. We hope you all had a successful, safe, and celebratory 420. So earlier this year, Marijuana Business Daily published an article by John Schroyer titled "California Marijuana Firms Face More State Tax Audits, Millions of Dollars in Unpaid Taxes." So this article went on to say that cannabis tax experts warned that the industry should expect state regulators to ramp up tax enforcement, noting that several audits of marijuana businesses are already underway. We asked two of these two tax experts in the article, CPA Patrick Finnegan and tax attorney Regina Unegovsky, to join us today to help shed more light on what's going on with taxes, tax enforcement, and what to do in case of an audit. This article importantly notes that we recently hit a milestone. It's been 3 years since the launch of California's legal cannabis market, which equals the state statute of limitations for how far back auditors from the California Department of Tax and Fee Administration, or the Cdtfa, can go to examine business tax returns. So the concern is that cannabis companies might have delinquent tax bills or be facing new audits. Some experts even estimate that the state's tax tab is at least in the tens of millions of dollars. We know the global pandemic created lots of unforeseen challenges for lots of people in our community, and we wanted to be sure you had an opportunity to ask any questions and get any additional support you need from these cannabis tax experts. So before we get into the webinar, we just want to do a quick introduction for those of you who don't know us. Since 2014, Meadow has been building California's best dispensary POS. We have a full suite of connected software tools from in-store retail, delivery, e-commerce, CRM, marketing, and loyalty programs. We are really designed to make it easy for you to sell more cannabis with less work and build your dispensary or delivery business to make more money. So we have happy mom and pop customers to some of the largest dispensaries and delivery services in the state. We are headquartered here in San Francisco, and I just wanted to give a shout out to all of the current Meadow partners in the room today. We're so grateful for all of you, and we're grateful to work closely with you, capturing your feedback and helping build a product that you need. So because we're the only POS built in California specifically for California regulations, we're able to work closely with our dispensary partners to work hand in hand to build the tools they need to thrive in this regulatory environment. We also just launched a brand new website, getmeadow.com, which has several case studies featuring some of these happy dispensary partners. So if you had a lot of downtime or on 420, if you need quicker customer support or have a list of frustrating things about your software that you'd like to see improved, we would love to hear from you. So let's get into today's conversation. We are so pleased to welcome our special guest, Regina, who is an attorney with Regal Tax and Law Group. She brings more than 10 years of experience working with state and federal taxing and regulatory agencies to her clients and has been concentrating on compliant startups in cannabis. Welcome, Regina. Our second special guest is Patrick Finnegan, who's a licensed CPA and former state auditor. Patrick specializes in federal, state, and excise tax cases and now represents cannabis dispensaries, distributors, and manufacturers undergoing federal, state, and local tax audits. Welcome, Patrick.
Thank you.
Today's conversation will be moderated by Wally Wong, who is on our Meadow SoCal sales team. He also leads our education and social equity programming. Wally is passionate about cannabis, equity, and helping our partners navigate retail compliance so they can sell more cannabis while taking care of their customers, communities, and teams. So I'm going to sign off and let Wally take it over. Thanks, everybody.
All right. Thank you, everyone, for joining us. Thank you to all the existing Meadow partners in the room. Thank you to all the future Meadow partners in the room. This is the big one, right? So we just made it through 420, and here we are about to talk the fun stuff. It's tax season. This hour is going to go by quick. We did one of these last year, and I know we're going to do our best to give over some real actionable information. Regina and Patrick, thank you so much for making time. So let's start with, California rolled out its legal cannabis market in January 2018 with two new state taxes, a 15% excise tax and a cultivation tax. This past January marks 3 years since then. Why is this milestone important in terms of audits?
I guess I'll start. The 3-year period is important because it's a statutory issue with the state of California. You can't go back more than 3 years under an audit. So now the Cdtfa has the ability to go to the beginning of when the cannabis retail taxes began. And that's just a natural period. They've been getting employees, hiring, getting the budget process, getting that all together. That takes time, doing the audit selection. So that 3 years pretty much is the start of the gun for tax reviews.
And Regina, anything more to add there? I mean, we did see that article. I know everybody, we caught a breath internally at Meadow when we saw that article about the IRS had prepared their auditors for the past 6 years for cannabis audits.
Yeah, absolutely. The 3-year mark is absolutely very important for state-driven purposes, right? And state agencies, Cdtfa, absolutely. But I'm going to include and throw in the EDD for categorization specialties being appropriate, as well as local municipalities. Where the 3-year kind of mark falls short just a tiny bit is on the Internal Revenue Service side, because 3 years, although our initial statute can be exceeded and can grow to 7. So if I have an IRS audit that has changes within either income or total amount of tax due in excess of 25%, right? So that's a huge audit failure, right? That's a major level of discrepancy. The Revenue Service actually can push past that 3, go back 7 years. For my cannabis clients, this is going to be important if they operated in a non-permitted, non-licensed environment prior to legalization.
Okay. So let me clarify on this, because we're going back, and I'm glad we're engaging on this. So you're saying if you were pre recreational legalization, if you were operating, they are considering going back that far in terms of.
Absolutely. They can. You know, the purpose or the point of the story is that they can go back. So on the Revenue Service side, typically when we have an audit, our first job, our first goal is to quarantine it, right? Limited to a certain number of years. One entity, especially if we have one of those, California specials where we had a management company and this and that, so we want to draw lines around the audit and say, okay, we'll comply, we'll do what we need to do, but here's our data for this particular entity, and that's it. That's always the goal.
And like, speaking to that, to the immediacy of the now, to these first, as we go into Q2, what have you seen over the past year, both of you, in terms of, we've been aware that Cdtfa is ramping up audits, but who is getting audited? Why? Is it all through the supply chain? Is it retailer focused? And, what does this look like, when it's in play in terms of the execution of the audits themselves?
Well, for my clients, what I'm seeing is retailers certainly are being audited, and primarily for the sales tax transactions. I have clients that are in manufacturing and distribution. Cdtfa is looking at the incidence of when the taxation occurs. So when a distributor is selling to the retailer, they're looking at the excise taxes. They're also looking at cultivation tax. Seems like a real area of review that is fraught with difficulty. In everybody's passing the tax down the line, but the Cdtfa will look to see when the COA, when the certificate of analysis was done, where the packaging was done, and they'll hang the tax on the individual that completed those items. So there's a lot of pitfalls. And I would also caution too that, as Regina mentioned, it's not just the state and local audits that are going on. The localities are hiring companies such as HDL to conduct tax audits as well. So I would feel for the cannabis retailer or distributor, they're getting hit from all angles. And I'd probably say the same about cultivation companies. So yeah, that's who's getting audited. And generally, the bigger you are, I know when we did audit selection at Cdtfa, we'd like to get some of the bigger companies, do kind of stratification on our selection, throw in some big companies, but also hit some medium size and maybe some smaller. And from that, the tax boards and the tax agencies will have an indication of what's productive. I mean, where are we spending our resources for our staff? And they should be seeing some fairly substantial tax dollars coming out of the cannabis field.
Yeah, I mean, this was the biggest year. This past year was the biggest year for cannabis sales in California. Regina, anything more to add to that in terms of what you're seeing on your end?
I feel like on my side of the fence, right, people are coming to me because they have maybe an extraordinarily difficult situation or outstanding balances that they can't pay. From an audit perspective, what I'm going to tell you is that typically, and only in my experience, there's no purpose in auditing the state or anybody else in auditing a company that consistently posts losses, right? So if I have a huge company and it's in cannabis and it's, extraordinarily input heavy, right? So investment heavy to launch, right? There's not much of a point in auditing when, irrespective of everything else, okay, I'm a taxing agency and I've got $1 million of losses I have to overcome before I cause positive tax dollars to be fruitful. That being said, there's also a rub. If I have a company that's been posting losses every year for 5 years, now I have a taxing agency that says, hey, why are you still in business, man? You should have shuttered by now because what you're doing is obviously not producing any type of revenue that you can hang your hat on. So the two concepts, have to be balanced. But overall, that's part of painting the picture, right, of my taxpayer to my taxing agency.
Thanks for that. And why I want to let you know I saw your question. We're going to try to get through some more, and then we'll kind of pivot out when we get midpoint through and try to answer some questions and keep it moving. So a spokesperson for the Cdtfa noted that this is the first fiscal year in which excise and cultivation tax audits will be funded by the state legislature. What does this mean for the cannabis industry?
More boots on the ground to complete those audits. That's it, hiring.
And I want to bring up what we were talking about, because this was news to me, what we were talking about even right before we started the webinar today, where, I don't know if everyone saw, there was an execution of an audit. I don't know what caused by where they utilized the metric account for where they were using it as a point of auditing in Las Vegas. And it was really, I'd love for you both, Regina and Patrick, share what you're seeing in California, which was really surprising to me because we thought that hadn't happened yet in terms of using the metric account itself as a point of auditing.
Go for it, Patrick.
Yeah, well, I had a client, or actually we're at the tail end of the audit. They got reviewed, and the Cdtfa looked at their metric filings, I think probably for about mid-2019 onward, because I think that's when the best metric really comes into focus. And they reconciled the metric to what was reported by my client, and that became a part of the audit review, in that if they see that the metric is properly reconciling to what we're reporting, they have that comfort level to know or to believe, and the auditor can write in his working papers that I've reviewed the period from January 2019 to December 2020, found no errors based upon that review. It's my determination that prior periods are fine, and then we just move the audit, and that's obviously both Regina and I's goal. That is why the metric system is going to just be so critical. It's a tool in the auditor's toolbox. It's a third-party verification of an activity, and that is golden when you're performing audits.
Yeah. And from my perspective, I've been seeing the beginning of the taxing agencies utilize data from metric to auto reconcile. So we're going to get to a place where, just like, for example, if you submit a tax return individually, right, and you put down some information in your tax return, but your W-2 says something differently, okay, computer systems don't reconcile, and they auto correct the return for you. You get a bill in the mail, that's it, right? Your data input was incorrect for some reason. Likewise, metric will be used that way, and I'm starting to see it, especially for clients who have acquired a location that was operated by somebody else in the past or wasn't licensed at all. And so metric spits out this data or all of this information, and that client is receiving mail from the Cdtfa that says, hey, cannabis taxpayer, thank you so much for filing your tax returns. We appreciate it. We noticed you were in business for a couple of years before you started filing. So here is what we think should be your accurate outcomes for those years, which we're extrapolating and mimicking from the 1 or 2 years of metric data that we do have. that becomes, a fairly difficult assertion to negate with the taxing agencies, but it's completely, at this point in time, a little bit made up.
And this is active to the moment. We did a metric webinar earlier, pre 420, with Brian Maravandi of his team based out in SoCal. And just like quick tip for the teams out there, especially the retailers, if you're not downloading your sales report off a metric and just doing a mental check to see, relatively speaking, that it reflects, like it feels right. That's one thing you can do. Short of that, it's also worth noting that we're already seeing that metric is very reticent, both and also from the BCC side, they're very reticent to do massive package adjustments in that switchover process. I'm not gonna, well, yeah, I am gonna toot our own horn. Meadow's really good at metric, and we face a lot of switchovers because of inaccuracies and gross discrepancies. And what we're seeing is in these situations when they're facing gross discrepancies, it's becoming increasingly harder to do mass reconciliations. So that's to everyone in the room. If you're not doing cycle counts, you need to start doing cycle counts. You need to up your game in terms of internal SOPs. And to this day, this is like two dots that we're connecting right here today, that there's real audit exposure around your metric account. I think everybody's intention when we went into it, when the supply chain got onto it, that the intention was package auditing, relatively making sure that all the product and anything supply chain was going to be testing. I didn't think it would be this quickly that we would see auditing based off of metric. Serious stuff. So Regina, you estimate that based on the tax situation your clients face, the state is likely owed tens to hundreds of millions of dollars in cannabis related taxes, whether sales taxes, excise taxes, or the cannabis cultivation tax. Can you tell us more? Why the discrepancies? Where are you primarily seeing unpaid taxes and why?
I'm primarily seeing taxes unpaid actually on a municipal level, if we're talking about the state as a whole, and out of what I consider high churn and burn locales. So we all know that we've got a few cities and counties that, especially in 2018, they were off like gangbusters, just issuing permit after permit after permit. They were doing that to draw business to their location. Totally understandable. They want that tax revenue, and they wanted to be a little bit like the Bay Area is as a tech center. They wanted to be the cannabis center, right? So if you wanted to launch a big business in cannabis, you go and start there. They did promulgate really high local taxes, and bottom line that, especially in 2018, those numbers as inputted into a price per unit were probably not making my clients very successful or competitive, right, with folks who are not paying that high of a local municipal tax. So ultimately what you had was a lot of pop up and pop down, right? But in the middle, you're churning and burning 10, 20, 30 million dollars, okay? And 10% of that is, quite a lot. When those companies pop down, if they're structured properly, the tax doesn't carry over anywhere, okay? So it's just a loss for the locale. That's it. On the other hand, Cdtfa and all of the other state agencies, I'm still watching a lot of people carry high dollar balances. They just are, that's all that there is to it, be it an outcome of 2018, getting feet on the ground and getting worked up into what the payment is going to look like, but also competing with illicit sources of the product. For whatever given reason, I've got a number of clients just carrying high dollar balances. That's it.
And Patrick, do you have anything to add to that? What are you seeing? Like when somebody's coming to you in the capacity of needing a new CPA, like basically, what does that initial assessment look like? How bad does it look like? Or where do you see that there's gross discrepancy is in their taxes?
Well, hopefully there isn't gross discrepancies in their taxes when they contact me.
Harder.
Yeah, because then
we all hope the same thing in different capacities.
I charge a higher retainer and try to get out of it. But I'm seeing, here's the frustration, and I feel it in the industry, is the tax burden is incredible. I tell this story as I started as an excise tax auditor for the state of California in 1991. I got promoted. I started in 88, got promoted in 91 to a lead auditor for the alcohol beverage tax program, because they raised the tax rate from 4 cents a gallon to 20 cents a gallon for alcohol beverage. And that's 1991. To this day, alcohol beverages have not changed the tax rate in California. I mean, it's still 20 cents a gallon, and the tax remains the same for 30 years. Compare that to cannabis. It's the feeling of a distributor that they are in business to pay the state excise and cultivation taxes, because after they're done paying those, there's not a whole lot of money left. Add to Regina's point that local taxes take a big chunk. I think if she's talking about Oakland, it was as high as 10% of your gross receipts. And distributors know that they've got a 12 or 13% margin. You know, they're buying something for 10, they're selling it for 11 or $12. So when your government is taking all your profits, there is that churn, and you're not getting the tax compliance. I would also say that there's probably some people out there that saw that charging the excise tax to retailers was a money-making proposition if they did not remit that money back. They burned away their corporations, they're gone. The retailer paid for the excise tax, the state's not collecting. There's a lot of ways that tax avoidance is done in cannabis, and I think that speaks to Regina's discussion of how much money is out there on the table that hasn't been remitted, and it looks bad for the entire agencies. And the successful cannabis companies are those that can deal with their taxation. I know it's weird that that's a primary reasoning of success. It's not how good your weed is. It's not how, but can you carry the burden of taxation long enough for your product to find its niche in the retail market? Crazy stuff.
It is. And you know, on our side, we literally see it, because I think what's so specific about cannabis, back to the metric portion, back to our side of the table, is that every inventory workflow ends up getting reflected directly into the operational costs of the system, of the overall operation. So we know for a fact on our end that the teams that make the most money are the teams that run the most efficiently. And this is directly related related in their metric account. It's directly related in their labor costs, and it's directly related in their tax execution. They're just quieter teams. They're quieter teams that are having good goes of it. And I would say too, what Patrick is saying, it's not always the ones that you think. Somebody always asked me recently, what do you consider a successful operation? And I'll point to, I won't name them, but it was an operation here down in Long Beach, regular strip mall dispensary that absolutely crushed it. But I knew their team. They had an incredible CPA, to what you're saying, Patrick. They ran their books right. They ran a tight operation, and they've had a great go of it over the past 2 or 3 years. We're at 2:26. I'm gonna take some of these questions before we keep going, and then we'll keep going further. Wyatt Lynn, are sales tax audits cross-reference sales numbers with metric? I think we answered that. We're seeing that, Wyatt. The sales tax audits are becoming cross-reference with metric. So if you're playing it wide open, it's time to tighten up your operations. This is another great question to what Regina, that I actually wanted to dive deeper on, because I don't know how many are aware of the secondary market of existing licenses. So if you brought it up, you touched on it, Regina. If you do buy a pre-licensed dispensary that shuttered, I mean, I spoke to a team that was running out of the desert recently. They had picked up a license, a dispensary that had shuttered, and were reopening it. What are these liabilities? And like, I think what, these dots that you're connecting in terms of saying, they're looking at it through the eyes of the metric of the actual how many packages went through that previous store, but what are those liabilities? In your experience, are there true liabilities to that previous operation?
Absolutely, and the liability is rather enormous. I mean, there's a reason that for decades, realistically, most attorneys from a business standpoint would never recommend a stock buyout on a shift of a business. And there's a reason that alcohol licenses became a separately existing or transferable asset for, a store or a restaurant or things like that. We're just not there yet in cannabis, right? So if the state is going to go in that direction, we just haven't been there quite yet. So as of right now, if we're looking at M&A activity, right, we are looking at buying out an existing corporation, typically actually below the 51% line, which leaves the prior ownership in place until such time as local jurisdictions and the BCC allow for that transfer of licensure. Okay. We all know that this can take upwards of a year, 2 years, this extended period of time. During that period of time, absolutely, one of the state agencies or the IRS can come in and say, hey, the corporation, right, the box itself is still whole. Now we want to take a look at these prior 3 years when you, new owner, were not involved, but we're going to hold everybody liable. That's the argument the state agencies make. If we don't go in that direction, we also have Cdtfa, and I'm sure Patrick can speak to it as well, successor liability theory, okay? And that's one that's been used well before cannabis, okay? So if I have a restaurant that makes sushi, in a particular location, and I buy the assets of that business, I want to make sushi, but I don't want your dirty corporation. I don't know what you've been doing for 10 years. I want my own corporation. Fine. The Cdtfa can easily come in and say, actually, you're operating the exact same type of business that was here previously, okay? You're capitalizing on the goodwill associated with this location. Therefore, and it's your problem, you didn't look. Okay, that's the way they'll put it. It was your failure in due diligence to verify that the state sales tax was not paid for this location. We're going to hold you liable for it now. So the Cdtfa will essentially say the tax runs with the location and type of business in successor liability theory. Whether or not that's going to be applied to cannabis successfully is still at issue, right? We're all still arguing about it, but I can see it happening foundationally, right? Because of those liabilities that they're starting to post pre-metric.
Yeah, and one of the ways to protect yourself as a buyer of a prior entity is during your escrow, request a tax clearance from Cdtfa. They'll send an auditor through, and the auditor will review the prior business. They'll sign off that there's no additional liability, or if there is, then you can clear that in escrow, and then you buy yourself a successful or a cleared tax business, and that's really critical. So do your homework. Don't just jump into a relationship with somebody because you think you need to buy their business, or it's a good deal. Sometimes a good deal is too good of a deal.
Too good of a deal.
Right, too good of a deal.
But that's only for the Cdtfa, you can't request the IRS to audit you. Like, it just doesn't work that way, right?
Yeah.
So you're always going to run some risk. Same with EDD for categorization purposes. But yeah, anyway.
Such a timely discussion right now, especially when we're seeing so much internal, interstate, inside California M&A going on, which I didn't actually, I didn't predict. I didn't really see it coming. How many teams are coming together? Disparate teams coming together to acquire previous existing licenses. Wyatt, I see your question. I'm going to hit Elizabeth's, and then we're going to keep it moving with some more questions for Regina and Patrick. So Elizabeth's questions. Have you heard of instances where Cdtfa will collect more than the AMP excise for retailers if a company's markup is higher than the current AMP?
That's a good question.
Adjusted.
If they have, then it's not been a problem to dispute it. How's that?
I will take that. This is imperfect. We're creating the industry as we speak. All right, let's keep it moving. Hank, I see your question. And we'll hit Wyatt's question as well, but let's keep it moving, try to get to some more of these questions that we have here. Okay. Let me see. What key sales tax compliance issues are you seeing? What are people getting wrong, and what do they need to know to fix it? And we're just talking on the retail end of the supply chain, because we got a lot of retailers in the room today.
Yeah, I mean, I'm front and center on this one because I am seeing sales tax calculations that are inaccurate up and down retailers and delivery companies. So let me take the retailers first. There's software other than the quality that Meadow produces. I should get a plug for that. Hopefully like a pre-roll or something. But there are companies out there that are selling their software and they'll send, the rep down there to set up the software, okay? And part of their setup is they get everything ready for the calculation of sales tax. And what they forget to do is check that excise tax, separately stated, as well as separately stated local tax, needs to be part of the equation before the sales tax calculation is made. So remember, we're talking a 15% excise tax that's billed to the consumer, and oftentimes up to 5–10% on a local tax. So think about having 20% of your bill on sales tax being inaccurate. And then you go 3 years down the road and the Cdtfa says you've undercollected sales tax because you haven't put these two component parts in your equation. The Cdtfa is going to look to you, not your customer, because the customer is long gone. They're going to say any understatement of taxes, we're going to look at you, the retailer, and we're going to collect from that. The other real problem that I see all the time is the local tax calculation on sales tax for the delivery charges. They might have an area where high tax areas, San Francisco, I don't know, is probably 10.5% by now, right? But their system is set up to charge sales tax at 9% because they think that's the average amount that their retail customers charge. I mean, some are lower, some are higher, but if we charge 9%, we're golden, right? We should have enough money. The tax board will look at that and say, well, for what you've undercollected, you owe. What you've overcollected, we'll keep. So there is no average. There is no average. They're going to look to you and they're going to say, well, that's excess tax reimbursement for everything that you charged over. I would also caution the retailers out there on the calculation of excise tax. Let's say they have a product they paid $10 for, and they're the excise tax on that should be $2.70, right? 27% of the wholesale cost. If the Cdtfa finds that they're charging $3 and they're just including it in the retail sale price, but it's part of your calculation, Cdtfa will come back and say, you've got excess tax reimbursement on that excise. We want the total. We don't want what you remit. We want the whole part. So it's really critical to understand what your internal billing system is doing and what type of liability it's placing you into. I've seen some really bad softwares out there, and don't trust a person that's setting it up, because that's a big responsibility that you carry, and that person doesn't know your tax rates. He knows the software, but he doesn't know California, and you better get it right.
Yeah, I could add there, but Regina, before I spout off about Meadow, Regina, do you have more to add there regarding it? And specifically to both of you, anything specific to the micro business out there that we see, to the micro business that are holding those licenses? Because I know that their tax considerations are pretty unique, and those teams, there's more and more of those teams coming online. So
that's exactly what I would point to, is multi-function and multi-jurisdiction. Okay, so it's less common in Southern California because we've got some big, huge counties, right? But a delivery system, for example, in the Bay Area can easily deliver to 4 or 5 different counties simply, and have 4 or 5 different levels of taxation with different rates. Then top it all off, once you've got that POS system set up accurately the way Pat is guiding you to, don't forget to annually adjust it, right? Those numbers change. And so, especially over a period of time, I think that San Francisco did a sample a long time ago of restaurants, okay? And something like 43% of all restaurants had their POS systems set up incorrectly because they had set it up at one point, it was correct at that time, and then they never again adjusted it for changes, over the course of time. We're not there yet, so meaning we don't have businesses that have been in place for 15 years. Now's a great time to get into habits for once annual review and adjustment of a lot of your practices, including POS setup.
Yeah, and to that, I always like to say, if we were all so lucky, and I think for the new retailers and the new licensees in the room, I always we'd all be so lucky if we were just selling lattes and we could go get these wonderful, download these iPad POS apps and run and open a latte stand and just start selling lattes. Unfortunately, in cannabis, these POS systems and what we do at Meadow, that we're a key component. We embrace it wholeheartedly as a team at Meadow. We recognize how much of the actual license is running on our system. To the teams that are running out of, we're California specific. We're the only California specific that's fared well. We don't think the other systems can meet muster when it comes to the scale of the supply chain. If you're having placeholders inside the systems, whether it be for tax structures, whether it be for metric package appropriation, you're already doing yourself a disservice. You're already getting exposure just in those single workflows. So it's great to hear it from the experts. It's a big validation for our team and why we work so hard and being the best in California. All right, so let us talk about, we've got some questions. Let me hit some questions here as we move through. I gotta make sure we're at 2:38. Hank asked, there seems to be some noise that excise tax will move from distributor to retailer. Any comments? There's murmurs of that in the supply chain.
Probably makes sense from a tax policy perspective, in that I feel a lot more comfortable at the retailer level that those licenses might have more staying power than at the distribution level. And you don't want to put, you want to have the most secured entity paying the taxes and remitting the taxes. So maybe this will force the hand, all these audits that are happening. And if there's a lot of liability coming out of the distributors, they'll say, yeah, let's push it on to the retailers. The neat thing about retailers from a tax standpoint, you can suspend those licenses for non-compliance of taxation. We did it all the time for alcohol beverages. They didn't pay their taxes. They lost their license. It was suspended. The tax board worked hand in hand with ABC. I imagine that will be similar to what the tax board and BCC has as well.
Anything else to add?
Yeah, I think from a policy perspective, you're 100% correct. I think from a logistical issue currently with the structure that we have in place, it's just still real important to be able to demonstrate that you did pay your share, right? So if your distributor failed to pay it, it's not your fault. As long as you can validate your payment, and in a cash system, that's, not always as intuitive as here's my check, right? A copy of my check that I paid my tax, right? Especially in a cash system, you want to be really careful about how you pay and how you can demonstrate payment of tax at a later date.
And Regina, you mentioned the state could start enforcing collections of existing liabilities without auditing. What does that look like?
You get a really nice note in the mail, a love letter, okay? And it says, dear so-and-so.
We're doing it well, keeping it light. But
yeah, dear so-and-so, thank you so much for doing business with the state of California. Here's your balance due. Here are the options for payment. And that's really, your first letter. And then they'll start like increasingly, being threatening in nature. On a very low dollar balance, sometimes the state will use outside third parties to, like credit cards, like call you a million times. But on the higher dollar, you're going to start getting an individual human who's assigned to your case, and they're going to do things like knock on your door, and show up at your business. In the past, the Cdtfa has used the sheriff's department, for example. They'll post somebody, okay, at the door of a business. And they'll say, oh, you want to do dry cleaning today? Great. Go drop off your dry cleaning, give me $10. I'm collecting it for the state of California. It's incredibly invasive. It's, it's very unpleasant to like deal with stuff like that. And then it's almost like a last stand type of a thing. The Cdtfa can and will pursue individual ownership, officers, directors, even bank signatories if you have a bank account, for collection of the tax on an individual basis. So they'll push past the corporation and they'll say, here's those 12 people. We want to hold these 12 people responsible because the corp isn't paying us. And they'll start collecting against those individual assets.
Have you seen it going anywhere as far as the merchant processors themselves? Have we seen it go that?
Not my clients.
Right.
That's what I'm there for, to make sure that doesn't happen to my clients. But sometimes people call me and will say, hey, this is what happened last week, not in cannabis as of yet, no, but in other sectors, absolutely.
Anything to add, Patrick?
No, I think that's good.
Awesome.
So what top 3, top 5 for the retailers, in short, besides making sure that the taxes are executed correctly in the system? You know, at Meadow, we like to say that we don't use the word audit proof, but our reports are set up. You know, they're set up correctly. Accountants love us because of that, because of the way we set up our tax reporting inside the system. But what are some easy things that these retailers can do? Because I will say, like, to the timeliness of it, we've got brand new licensees coming on. We have teams coming on, earnest dollars, earnest time spent securing their license over 2-3 years. And here they are. They're finally here. They're about to go operational within these next quarters. What are some just good SOPs to start fresh, to not get the exposure? Because, you know, I equally feel as bad for everybody that had to go through this metric transition in these past 3 years. It's been such a challenge for everyone, no matter how you were deciding to run your operations. But now, you know, we've got new people coming in, and I can feel them when I'm talking to them. They're like, I didn't know, this is some deep water. Like, how can we set them up for success?
I mean, my first step is always, you know what, you're way too early in the evolution of your business, right, to need me. And let's both be grateful for that. But the first thing you do is you find somebody, either Pat or somebody in your local area, if that's important to you, a fantastic CPA, okay? Number one, that's your first relationship, because it'll guide everything else. If you don't want to do the accounting and back office, for God's sake, hire somebody before you run into 6 to 12 months of data that hasn't been inputted anywhere and is just floating around. Number three, and most important for all cash businesses, all of them across the board, find a way to document your payments, okay? Me just telling the Cdtfa, oh, my client really paid their tax just in cash, okay, does absolutely nothing positive for my client. I need to be able to validate, here's the paperwork, here's essentially witnesses. I mean, let's do what we need to do to validate those payments are being made.
Yeah, cash log is critical in cannabis. It's worth its weight in gold. Having it proper, showing who's receiving monies, having them acknowledge the money, certainly complying with Form 8300 for all $10,000 cash payments. The small things that you do to protect yourself, keeping invoices. Keep organized. It doesn't have to be a box with papers thrown in it. I hate seeing that. In fact, I usually tell them, go away. I don't want to look at a box with paperwork. I want accounting records that are summarized and logical, and are prepared using a 280E kind of background to know what your cost of sales is, what your sales and administrative expenses are, so that when it is time to prep and do your federal and state income taxes, we can do those seamlessly.
Yeah.
And I think there is a big push in the industry to find quality bookkeepers, certainly individuals to prepare tax returns, because it's sloppy out there. And a good bookkeeper is making a ton of money these days, and they're very much desired. So find somebody good. It's a big part of your business. If there's anybody out there that has good recommendations for bookkeepers, certainly pass them along. Love to hear it, because I get 2 emails a week saying, hey, who do you recommend doing bookkeeping for me?
Yeah, the cannabis specific accountants and bookkeepers I couldn't agree more, Patrick. I have the one I work close with. She runs several teams. I mean, she is so highly sought after, and she's so wonderful. Okay, so we're at 2:47. I'm gonna hit this last batch of audience questions, and we'll kind of wrap up here. So we had a question: what about successor liability for franchise tax and IRS taxes?
It can happen. It's a tougher argument for the taxing agencies. Yeah, that's income tax is not even questionably trust fund in nature, right? But sales tax is. So that's kind of the break, right? Income tax is generated to the company itself, and once the company is gone, it's gone. It can be made if we start showing absolutely the same pattern. So you can't just have ABC Inc., right? Oh, we went out of business, so sad, too bad. And now it's been replaced by XYZ Inc., which is the exact same people, investors, officers, directors. That's when you start running into like, okay, you were taking this step as essentially fraud, and we're not going to allow for it. But ultimately, income tax with the FTB and the IRS does not pierce nearly as easily.
Yeah, and just make sure you're smart and don't commingle funds. Operate as, I mean, there's some small
Corporate
things to
formality. Yeah,
corporate. Yeah,
observe corporate formality.
yeah, and that should help you along your way. Avoid that. That's why C corporations are so important in the cannabis industry.
And can you talk about use tax and promotions? Okay, because this is we get this every week on Meadow. So on sample, we have a use tax that auto calculates on anything that goes less than 50% of cost. But samples and promotions are such a huge part of the cannabis retail. And because, you can't give away anything for free. So what's the best way, most making businesses aware of the use tax implications on these transactions? Patrick, do you have a lot of experience with that, with the use tax?
Surprisingly, not that much. And here's the thing, what I am saying is retailers getting those samples and reselling them, getting them for $1 and putting them on their shelves and selling them for $8 again. So we're back. Yeah, they'll see if they're selling and make the judgment on whether to purchase more from that distributor, but oftentimes they're being resold. It's not always going to a customer or to a bud tender as a sample item. Oftentimes it is. I haven't gotten into the weeds on those, no pun intended, but I'm sure it's a bigger part than I care to imagine.
Well, yeah, and I'll tell you how we do it. At Meadow, we compare the purchase price of every product you sell to the retail price. And if you sell something for less than 50% of the sales price, we don't calculate sales tax. We ignore the retail price and calculate use tax using the purchase price. So say I buy a bud for $10, I sell it to Patrick for $1. Everyone's like, hey, sales tax is 10%. I just owe 10 cents of sales tax. You're wrong. You owe 10% of $10, which is $1 in use tax. This has been coming in so much, especially with this busy year. And Max, our head of tax and compliance, really stresses that audits will not miss this. And that the unpaid liability could approach 7 to 8% of the total wholesale cost of all samples in the state. So good thing to keep in mind. Consolidation of the 3 agencies. What are we thinking? How is this affecting everything that we've spoken about for the past 45 here? What are we seeing? A faster audits, quicker execution? I'm seeing what you're saying about metric. I'm seeing just a huge amount of knowledge share that I didn't expect coming so quickly.
No, the state of California is fantastic at harnessing a couple of different things, and techability is one of them, right? And they kind of foolproof it on their user side. I think that you'll see, just like at any time when there's a change, right? When the Cdtfa split from Bowie, for example, there's like an initial little period of, mush where you're not 100% certain who should answer what question or which department to call, or, there's a little bit of inefficiency built in change. Okay. And then once it kind of hits its smoothness, yeah, it'll just go by really quickly. It'll increase the speed of everything. But that was an eventuality from my perspective with the state of California, no matter what.
Yeah, I mean, nationally, it's where the supply chain equates to the compliance equates to the government agencies. I think as recreational cannabis moves forward state by state, we're going to see a lot of this consolidation as the supply chain gets consolidated. So any advice, and I think anybody would take it, regarding 280E? General advice about dealing with it, about what not to do, what's not going to go anymore with it, or the future of it as well. I think that's going to be the elephant in the room for so long. It's such a hindrance to to the cannabis space?
I mean, just deal with it. Yeah, you have to be prepped for it, build it into your business plan, sell it to your investors. Look, like this is what it is with it. This is what it would look like without it, right? That's the way that you achieve, number one, as you said at the top of the hour, Wally, that's how you show your investor that you are prepared to shoulder your tax burden. It is a modicum of success to be able to say, look, number one, we know about 280E. Let's just start there. We accounted for it. We prepared our returns in compliance, and we paid that bill. Or we're handling any types of back balances due. It's huge. I don't see any squirrely or sneaky ways around it if that's what you're asking for. Unfortunately.
Yeah. I think those days are long over. I think that
that's exactly it.
Yeah, the other area I'd say is if you're wanting to ever sell your business, the first thing I would do as the buyer would be a due diligence review of your federal and state income tax returns to see if you're applying 280E provisions. And if not, I'm going to require you to put money in escrow to hold any future liability that might come into play. I tell Regina, hey, set up a $1.2 million escrow account that we hold for X period of years in case we do have a large tax liability. They're not going to move off of that. No smart investor or buyer would. That's just going to be part of it. So if you're thinking that you're not going to be compliant because you just can't make the numbers work, also think about the long-term implications of that decision.
I couldn't agree more. I think, the teams dial it in. It's the teams that I see, trying to squeeze and trying to, basically do what they were doing 2 years ago. They're having they're spending more energy doing that versus just running it above board, hiring a good accountant and running it above board. I think those days are done. I think they've long been done, and I don't think it's tenable in the short term or the medium term. Well, I told you, everyone, it would go by quick. We've reached the end. Let's hand it back over to Aria. Thank you so much, both, for making time for us.
Yes, thank you so much, Pat and Regina. Such great information shared. We really appreciate your insight and expertise. And thank you to everyone for tuning in. I hope you got a lot of value out of today's session. If you have any questions for Pat, Regina, or Wally, their email addresses are there on screen. Feel free to reach out. And we're always looking to host webinars that are useful for our partners and California retailers in general. So if there are any topics that you'd like to see us cover in the future, let us know. We want to be a helpful resource for you and are always looking for ways to help you be more successful. So we will be distributing a recording of today's webinar to everyone who registered. Send Wally a note if you need help with taxes or compliance, POS, we are here for you. So thank you all again and hope you have a lovely afternoon. We'll see you again soon. Bye. Take care.